Let's look at an email here to start things off. Pseudo on Matador Resources, which is on the New York Stock Exchange. What do you think for the next 2 to 3 years? I'm assuming this is something you've recommended before. You hold this?
Yeah, so Pseudo's right. This is energy is our biggest weight in our equity portfolios currently, and that would be split probably evenly between infrastructure and E&P or production companies. Matador is a company that's in the Permian Basin. They have very strong production growth. The whole story, we think, behind the producers is not so much the price of oil, but the volume growth that's taking place and the new technologies that are being used to drop the cost of finding and lifting oil. So Matador will probably grow its production for the next 5 years at 35% a year. It's got a tremendous inventory of targets to drill. And to do a comparison against 4 or 5 years ago, a production company might have drilled a hole with a 50% chance of success. If they had success, they'd case it in cement, tie it into a pipeline, and produce in 45 days. Today, there's such certainty in drilling, they might have a 99.8% chance of success. So they drill 20 holes at the same time. They tie them all into the pipeline, and they're producing in 14 or 15 days. So Matador is a great play on the growth in production, and it's one of several names that we own in the U.S. I'd continue to buy it.
All right, thanks for that email, Pseudo. We have a call now from Jim, who's in Massey, Ontario. Hi, Jim.
David, I know you do stop losses. The TD Bank, would you sell a stock you think is fully invested, and what would be your parameters for selling it? Thank you.
Sure. So selling is one of the hardest things to do as an investor. All of us make our biggest mistakes on the sell side. And so one of the things that we do at Barometer is we use stop losses on each of our positions. Now, the reason for that is twofold. One, because you don't want to let a little mistake turn into a big one. But the other one is that people have a tendency to sell the things that have made them money because they want to protect the profit. When I look at TD Bank, within the financials category, the Canadian banks are behaving better really than any banks around the world. TD Bank is one of the best performing banks in Canada. Stocks consolidated over the last little bit between sort of 55 and 54, just coming out to make a new high. It looks technically very well set up. We know that there is some U.S. buying taking place in the Canadian banks. So long as they continue to generate the numbers, and so long as the price is doing what it should be doing, given what you think you know, I would really hesitate selling this thinking that it's hitting a peak. For a stock to go from 50 to 100, it's got to go through 51, 52, 53, and every one of them is a new high. So we own TD. I'd buy it here. In general, financials in the S&P have underperformed so far this year. The Canadian financials are outperforming. We prefer asset management and insurance companies, but the Canadian banks are behaving well. I would not look to sell this. I'd pick a price below the price you paid. I probably wouldn't want to see the stock drop below $51 or 50 and a half. I might use that as a stop. But at this point, I would be holding this.
Thank you, Jim. Another all-time high today for TD Bank. Switching into gold, we have Ray, who's in Red Deer, Alberta. Hi, Ray.
Good morning, gentlemen. My question is on Osisko. What was Osisko and these other two organizations took them over, but their dividends are less than if they're quarterly. And if you go monthly dividend, you make more money per month. And I think a person should sell those two and maybe just keep OR and get it back into the pipeline. So I'll listen to your answer. Thank you. Bye-bye.
Okay, well, I'll just give you our view. From a sector perspective, I think that certainly the golds got very sold out earlier this year, and they've had a nice bounce over the last few months. I would say when we look at them, they look like it's been more of a trade than a long-term shift. So we have had a focus in things like FNV, Franco. We've had a little bit of Goldcorp, a little bit of Agnico. Our bias would be to lighten them here. So gold as a group is not one that I would focus on. I don't like the way the OR is rolling over. I think that there's better opportunity in energy infrastructure. If you want exposure to something a little bit more cyclical, some of the equipment companies or machinery companies, I don't think you probably add gold holdings here. I'd look to be lightening them up.
Okay, there you go, Ray. There's your advice. So let's talk to John. He's in Toronto. Good afternoon.
Good afternoon. I like your guest's opinion on General Electric, if it's a buying opportunity right now and what the future holds for them.
Okay.
Thank you.
So, John, I have to tell you, this is one that I've been disappointed in. This is a proxy on industrial America and a bunch of different industries. It has underperformed quite badly. We did own it earlier in the year, and we've come out of it. If I were going to focus in the industrials, I would probably focus more on the chemicals than the heavy equipment companies. Given the fact that the S&P is hitting a new high and the stock just cannot seem to participate, I think I would avoid. If I owned the stock, I probably would move on to another opportunity.
So Dow Chemical, DuPont?
Yeah, Dow Chemical actually is one that we've added this week. We've talked in the past over the last few months about Lyondell. We've talked about Ashland Industries. We've talked about Westlake. Dow Chemical came with great numbers. The strongest part of their business was their plastics business. The thesis for the chemical companies is that the cost of natural gas, which is one of the biggest feedstock costs in the U.S., is exceedingly low relative to the rest of the world, so they've got a natural advantage. The chemical companies are becoming very, very profitable, and I would focus in that area.
All right, David, a short break here, and we'll get back to questions on North American large caps after this.